The O Cannabis Conference and Expo returns to Toronto June 1st through the 3rd, and there's still some good booth locations available. This exciting event is free for cannabis retailers and will feature Tommy Chong receiving a Lifetime Achievement Award at the O Cannabis Industry Awards. For more information about exhibiting or to register to attend, go to ocannabis.com. That's OCANNABIZ.com. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Today, we've got Dr. David Kunick, CEO of U.C.S. Advisors and Investor Relations. Dr. David, thanks for being on the Talking Hedge.
Thanks for having me today. Really do appreciate it. Really do appreciate it, Josh. Good to be here today.
Tell us a little bit about U.C.S. Advisors and Investor Relations. How long you've been doing it? How'd you get involved? What's it all about?
Sure, great question. So UCS Advisors and Investor Relations will be 4 years old actually this June. And the main reason why I kind of came about was I've actually started, this is my 13th company I've started in the last 18 years. I've sold 7 other companies, and really in cannabis, the unofficial stat that was a couple of years ago from Cannabis Business magazine was how an estimated 65% of all business owners are first-time business owners in cannabis or hemp. That's a large number. They don't know how to raise capital. They don't know how to pitch to investors. They don't even know how to even attract proper accredited investors to them. So pretty much it came out of need and demand. And the second reason why we came up with UCS Advisors is well, with one of my other companies, I had 63 private investors, which is a lot. And 55 out of 63 investors kind of said, your board of directors is kind of screwing you over. The minute you go out on your own again, let us know and we'll follow you. And here we are now, almost 4 years later. We represent almost 400 investors domestically and almost 200 investors internationally. And we help find them deal flow, and we find them right opportunities to invest in the cannabis and non-cannabis sector. And then as of a few months ago, we actually did a beta test, and we actually did our own small little raise, which we offered a 20% ROI in 12 months, and we got back in 7 months. So it's something that's really exciting now, where people will bet on us, kind of like bet on the jockey, not the horse. Because Josh, there's so many deals in cannabis and hemp that if you don't act quick enough, you're going to miss out on them.
Right. And if you don't have an advisory group that can take advantage of first mover advantages, then you're going to be left in the dust. It always amazes me that, Snoop Dogg's investment of Ease, a delivery service with 35 million, didn't take off. That's crazy. MedMen crumbling, that's crazy. So with all of the money and all of the hype, it still is going to require, traditional fundamentals like, I don't know, proper management and advisory, compliance, all of those things. And they're still figuring out the hard way. Before I get into your own involvement, you sold 7 companies. I want to get there eventually. But first, I kind of want to talk about your investor group. So you've got this demographic made up of over a couple hundred international investors. What are they? First off, I want to know what they were looking at before we talk about post-pandemic life now. So let's say like in 2019, were they part of the typical group that was looking for data or accurate dosing, vaping, maybe lounges? What were they looking at pre-pandemic?
Great question. And to be very frank, ROI, ROI, management team. If you notice, I said ROI twice, because you have some of these companies like, oh, we're gonna get you a 10 times return on investment in 5 years. Well, my international investors are like, okay, let's cut that in half. Let's just say it's gonna be 5 times then. And then let's really divulge into the numbers. We can really get that 5 times. And the second big thing is really management team. The one thing that was really interesting, especially I took one of my companies on the Frankfurt Exchange back in 2012, 2013. And what's really interesting, especially dealing with a lot of investors over in Germany, over in Switzerland, is they want to see a management team that can make a company grow and that has a track record to make the company grow. And to really make it, for lack of a better term, going from that small cap to that mid-size, that mid-size cap range, to really be able to take that company from maybe less than 10 employees to 10 to 30 employees. And that's really where they're really looking at. The larger companies, the Tilrays, the Auroras, they kind of, that's not of interest to them. They really like to see the
Mhm.
next big thing that's coming up.
So they're looking for a unicorn. They want to see a $1 billion valuation from, a really teeny valuation, which is,
They do, but they also know is that the one thing I give them credit, especially, and also depending what part of the country I'm here in the U.S. is also or is also okay. Do you want to hit a single or a double instead of a home run?
mm,
And it's really realizing that. We have a certain group of international investors. They want a 15x, and they're willing to wait 4 or 5 years. And if they lose their money, they're like, "Great, we lose our money." But that's something that they want. And what's also really interesting too is that um, more so, it wasn't pre-pandemic. It was more so the election that they're really concerned about, and that's something I thought was really interesting because not to get into politics, but back in 2016 when Trump won, a lot of our international investors in 2016, 17, even beginning of 18 were a little hesitant because they wanted to see what kind of the international rules and regulations for doing business, how that was going to change, and they were a little worried about that.
mhm. What are they doing now? Now, I mean, so I saw the cash inflow was crazy right around election. In fact, we've got some predictive analytics on an AI based algorithm that we've got. And that kind of gave us a 30-day window in advance where we posted on social media, our cannabis stocks poised for a pop. And right after that election, you saw the cash flow coming in and all of the investment when the House and Senate and presidency took over and are more bullish, I guess, on cannabis becoming legalized than the previous administration. So, with that being said, where is the investment now post pandemic? Is it primarily still looking at ROI, management team, and international expansion with, potentially Mexico and Israel legalizing, creating FOMO in the US?
So I would take that question and I'd almost take it a step back, where if we're dealing with or at least for us, our international investor, they're not so much worried about international growth. They also know that in Canada, the market makers really control the market up there, right? Or that's their feeling. So to really see the great expansion up in our northern country up in Canada, they don't really see that. They're really more so looking at the expansion throughout the U.S. They also really waiting for the federal re-regulation of cannabis as well too. Really seeing it be able to cross borders. In terms of South America, the biggest issue I always get asked is taxes, 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 and how we're going to handle the tax issue. We actually had several deals in Jamaica fall apart, several 7 and 8 figure deals fall apart in Jamaica because the investors couldn't get a straight answer on the tax ramifications of it.
So, just to clarify on that, people are going to Jamaica. Bob Marley, kind of famous in the industry a little bit, and yet you can't take investment from Jamaica. It's on the FinCEN report with all the other Iran and all the other countries, North Korea. So how does that work when you go there and you have a partnership? How is that? How does that work? Can you take the money back to the U.S. or now you going to be on some federal list?
Great question. And I'm a medical guy by trade because I have 2 doctorate degrees. So I take a very blunt approach. I don't have that exact answer because,
Mm,
Josh, when we were trying to get that exact answer, we couldn't get it. We actually had a very large investor from Texas that was doing high 7 figures and looking to do something in the Caribbean.
mm,
We couldn't get the straight answers.
mm,
And the worst part is that this is where also the people that were receiving the money, who said they had these great political contacts and get straight answers, still couldn't get straight answers.
yeah.
And the investors were smart and they're like, we'll put a clause in our deal
Mm,
that if you're wrong, then X, Y, or Z will occur afterwards.
mm,
And they said no to that. And our investors just said, you know what, then we're going to walk. The one thing, Josh, I got to say point blank is this is an investor's market. There are so many deals out there. You really need to stand out from the rest. You really need to sit here and know your numbers. Really have that good exit strategy. The one thing that I think is really interesting is how many companies don't have a proper exit strategy for the investors.
When do you develop that? I mean, I develop it before I even start a business because you need to have A, B, and C on your ideal, what you're willing to take, and then how you're going to reach that goal. When I started the Seattle Super Chronic Cafe in 2015, I created a business plan without making a menu. And then realized that when I was pitching this thing, none of it really made sense because if you're creating something from outside with an exit strategy, with licensing before you even create a menu, your priorities are wrong. And you don't really kind of get the love and the soul of it into the plan. So with that being said, with an exit strategy, when do you create that? When is it appropriate to even implement that from an idea standpoint?
So what we teach our clients here at UCS Advisors is sometimes you need to work backwards because people say, "Oh, well, I don't really know what I want." I'm like, it's really simple. Is your goal to get acquired one day? Because less than 13% of companies get acquired, and that's a whole nother realm you go.
Mm,
Are you looking to eventually maybe go public? Great. Then you got to set up your company from the get go in a whole nother fashion. Are you looking to make this a company that you can give to your kids? You want
mhm,
this company around for the next 20 or 30 years. And there's a whole nother way to go as well, too. And sometimes you just need to really work backwards. A great example is sometimes we tell people, this is a 5 to 7 year run. Also, too, don't have investor syndrome, where you sometimes it's if your company is such a great unique idea, maybe you have some intellectual property, maybe you have some patents. Well, great. It's better to have 5% or 10% of something than 100% of nothing. And if you know how much capital it's going to take and how much time it's going to take to actually develop what you have, you know what? You might want to give away 75 or 80% or 85%, because most other people are going to be doing the legwork. So, what we always say is come up with several exit strategies for the investor first.
mm,
And one of the biggest mistakes we see, especially with our clients trying to raise capital, is they go, "Oh, I want this ideal investor, I want this ideal partner." And you start picking their brains. And then I go, "So you want someone to give you their business advice, but you want full executive control. And you don't want to take their advice if they want to give it to you. You can't have your cake and eat it too."
mhm.
So one thing we always suggest is come up with 3 different exit strategies for the investor. Because even though 2 out of 3 might not come to fruition, the fact you thought that far ahead to the investor shows you're really putting them as a priority. A great example is we sent a board of directors for a grow operation in Michigan and a dispensary in Michigan. Person's originally from New York, and they were able to raise their first $4 million in pretty much less than 90 days. And they
Wow.
had 3 exit strategies for the investors, and it was very well thought out. Here's option A, here's option B, here's option C. Here's a percentage of each option. Ideally, this is the option that we would like to have for all our investors. But worst case scenario, we're hitting one of these 3 options. And
Mm.
that really gave the investor peace of mind, which is most important.
I'm wondering, giving an investor peace of mind, and the entrepreneur knowing that only 13% are being acquired, why go anywhere else other than Puerto Rico? So a lot of people are going to Jamaica, and I'm wondering, with an exit strategy, wouldn't it be more advantageous to be in Puerto Rico, the only place in the world an American can go and not be forced to pay taxes? So wouldn't that be the best advantage, especially if you're in California as a CBD company? How can you compete if you're paying 20% to the government when someone in Puerto Rico isn't? So as a reminder, if you don't have representation, you can't have taxation. So Puerto Rico doesn't have representation, is the only place you can move to anywhere in the world and not pay taxes. I've said that if you don't have an entity in Puerto Rico, whether it's a bilingual call center, research and development, or your sales team, you're not going to be around post pandemic, or at least in a few years. I think 85% will be out of business, um, because margins are tight. What is your take on advantages in the industry and utilizing Puerto Rico?
Wow, you know what? You're getting some good questions today, Josh. I like this. Make me think here. I like it. I
Grinding
like
you.
it. So I have a slightly jaded opinion about Puerto Rico.
Okay.
As a former CEO of a public trade company, as someone who's worked with a lot of these toxic in the past convertible note guys who
Mm-hmm.
actually had to build or put some of their satellite shops or offices, in Puerto Rico, it's not all that's cracked up to be.
Mm-hmm.
And they're having issues. And it's not as simplistic as most people think. And the next step I'll say is that for myself and for what we're doing, Puerto Rico is not even on our radar till 2022.
Mm-hmm.
And the main reason being is that from their power outages, from their destruction, from other natural disasters, they're still rebuilding. They're still rebuilding their infrastructure. We actually had a couple clients who were doing stuff in the electrical side and also with the electrical grid in Puerto Rico, and pretty much lost their shirt.
Mm-hmm.
Um, so in general, I agree with the overall concept you're saying. I just don't think Puerto Rico can handle the infrastructure for enough companies moving down there to do that. And once they become a little bit more, for lack of a better term, solid,
Mm-hmm.
then I think Puerto Rico, I agree with you. Then the next 2 or 3 years, if you're not doing something down there, yeah, the margins are too tight, and you're shooting yourself in the foot if you don't do something down there. But for the immediate short term, the infrastructure needs to build up a little bit more.
Yeah, I think it's a nightmare actually for production, product development or manufacturing because of the Jones Act. You can only have one port of entry and exit, makes an absolute
Hmm.
nightmare. But for an online service provider or sales or something like that, I think it makes a lot of sense. So 2022 is right around the corner. So you're getting there eventually.
Oh, exactly. And for us, like we'll start reaching out to our contacts down there in the middle of the third quarter, just so we can start planning ahead. And Josh, I think it's one other thing that's really important that wasn't talked about is that I know we're talking about cannabis and hemp, but the one thing people are not looking at is all the ancillary services in cannabis and hemp,
Hmm.
and how you have a lot of these small to mid cap size companies that are now starting to build a cannabis vertical within their business. And that's something that's really important where you have other companies that already have very large margins, and now they're starting to expand into and build a cannabis vertical for their products and services. And you're going to see a lot of these companies start in 2021 and 2022 to really start talking about those cannabis verticals. So I think that's one thing where, as an investor, you need to be mindful of that.
With anybody looking at a North American market and investing, I find it interesting that the Canadian LPs have pulled out of places like Colombia. They've sold off their 250,000 acre greenhouses or whatever. Um, so with the reduction in outdoor greenhouse growing in Canada and utilizing their great terroir and low cheap labor in Colombia. I'm curious, post pandemic, investing in the marketplace, is it going to be about automation to try and bring the costs down? Because if you're growing for $6 a gram up in Canada and your counterparts in the U.S. can do it for $1.30, I would think vertical integrated agriculture, automation, AI, robots, all of that is going to have to be implemented. When is that going to happen? What are investors looking at post pandemic?
So, you, a few parts. So let's talk about the post-pandemic comment. Uh, what we're really seeing in our investors post-pandemic, we've been past the pandemic since September. It's been almost 6 months now.
Hmm.
Now, not everyone might agree with that, but when you really look at where things are going, when you look at cannabis being deemed essential, when you look at what happened at the election, when you see, and a lot of these novice traders are selling because they're worried left and right. The sophisticated trader and buyer or investor knows what they're doing, and they were able to gobble up a lot of great stock and a lot of great companies for pennies on the dollar, and they're doing great now. So to the sophisticated investor, for cannabis, the post-pandemic has been over for a while now. In terms of the automation and really decreasing the general overhead, I think we're going to see by this time next year the larger MSOs seeing a significant decrease in their overhead. I think they're going to start to realize that they'll be talking about this aspect more to their shareholders. the one thing that I think is really interesting is the larger the company, really, they're not really discussing through their press releases, really communicating with the shareholder properly. You still really have to really dig through their financials. You still have to really get on the phone and actually call their investor relations department to really start asking the key imperative questions because they're not really telling the public overall. And then I will say what's also interesting is, and I can't believe I'm even saying this, is that I have to admit in the last month, seeing some of these CEOs be on Clubhouse, the app, and to see them just be so free in what they're saying, I'm like, as a former CEO of a pubco, I'm like, my lawyer would be calling me nonstop saying, "Shut your mouth."
Right.
But some of these things they're saying on Clubhouse, I'm like, really? Like you're gonna talk about this right now with a bunch of random strangers? Like you don't have your lawyer proofreading what you're saying or what you're doing? Like talk about like just giving information out to the public.
You're assuming, I mean, they are publicly traded, so
Yeah.
hopefully they have a lawyer, but you're assuming they have a compliance department. I've seen so many that don't have like a CFO. It blows my mind. Like who's making the decisions? It's crazy. Um, So speaking of compliance, you weren't on the DAX. You were on Frankfurt out in Germany,
Correct. Yep.
publicly traded. That
Mhm.
takes a lot of compliance. So I'm curious how that all works out. When I worked for a brokerage firm, I was like the 10th employee in operations. We built that out to like 50. So to kind of see the compliance team go from one woman to a team of like 15 people, getting gobbled up by E-Trade eventually. I was able to see, obviously the importance of compliance. We've seen that with Robinhood and that whole GameStop issue. What's it like going public? You've sold 9 companies. Tell me a little bit about that and what it's like to go public and the requirements surrounding that.
I appreciate that, and not 9 companies yet, so close 7.
7.
So I was close. So hopefully be selling a couple more in the next couple of years. So so going public, I actually did my own S1 back in 2009 here in the U.S. And that was definitely an interesting experience. At that point, I was young, naive, 30-year-old, 29-year-old. Like, hey, when some of my investors like, hey, you want to take a company public, and you really got something here, and I think you can raise $14 million in cannabis. Back in 2009, it was not easy to raise $14 million in cannabis.
No.
I'll tell you that. And everything I probably could have done wrong, I did wrong, to the point where we're joking about the lawyers and compliance. For the first 9 months, every week, my lawyer we would have a weekly call for 90 minutes on what I could legally say and what I couldn't say because I was messing up an interview so badly. But it was a great learning lesson. And I wouldn't change it for the world. And also now to be able to say, being a former CEO of a pubco, especially in cannabis, um, it really does open up a lot of doors, and it's been a great life lesson. In terms of Frankfurt, full disclosure, I was extremely, extremely lucky where we had a few investors that international investors that had already taken other companies on the Frankfurt exchange. So they had the compliance department already over there. They already had the market makers over there as well too. So it was pretty much, could we afford to do what to do that? And also, do we have enough interest from the market over there to actually warrant doing it? And we did. Overall, probably did about 9 trips to Frankfurt. I did about 2 trips before we went public over there. Then I did 7 trips afterwards. And it was a great experience overall. But to be very frank, I was extremely, extremely blessed. People ask, what was the secret sauce in doing it? And I go, honestly, networking and contacts. And it sounds extremely cheesy to say that. But the one thing, especially what I find interesting is, especially sometimes with investors, is they don't have a large network. And depending who you network with and who's in your wheelhouse, that's how we got the Frankfurt Exchange. I mean, plain and simple. I had no desire, wasn't even on my radar. To some of our investors said, hey, we think you
Mhm.
should do this. And when we started to do our due diligence, and our lawyer here in the US, very luckily, is fluent in German.
Whoa.
Yeah, like
Will you explain that due diligent aspect of like why you chose Frankfurt? Because a lot of people will just do a reverse takeover up in Canada or the OTC markets down here in the US. Why Frankfurt over, the FTSE in London, or um you know the CAC in France? You chose Frankfurt in Germany. Huge market, largest one in Germany. Was that part of it? Largest
Partly
largest
was it.
economy in Europe, I mean.
So so a few reasons. One is when we did our own S1, when I started doing my own due diligence, I'm like, why don't we just do a reverse merger? And they're like, no. Remember, when you do your own S1, it's like building your own house.
Mm,
So if everything goes to crap, at least you could sell your original house,
mm,
which made me think, okay, if you use like PACE, which is primary, alternative, compensatory, and E stands for emergency plan. Okay, if everything goes to crap, all right, I could always just sell the shell then because it's my own S1 and I built the house from scratch. And it's the best analogy I've ever been told on that. So now that we have our own S1 and we're doing cannabis back in 2010, kind of speculative back in 2010. And Canada, well, the market makers control it too much. Having some good mentors of mine who have done companies in Canada, they told me about a lot of their nightmares. We did a few preliminary phone calls with clients in Germany. And the one thing in Germany, we talked about this before we started, is what we really found out is a lot of the investors over there will invest very heavily in speculative deals.
mm,
I mean, you mentioned gold or silver or diamonds or like some other mineral, and they'll throw hundreds of thousands of dollars at it. And when I saw some of these pitch decks that they're throwing hundreds of thousands, millions of dollars at deals, I go, there's a good chance this is not going to work out. They're like, yeah, it's okay. But if it does, they're very happy campers. And after that, talking to my board of directors, um, also having an American lawyer who's fluent in German and also had contacts in Germany as well too. It was one of those things where all the planets are aligning. Why not go with it? And to be very very frank, talk about being a blessing. Now we work with almost 200 investors, individual investors over in Europe, and that would never have happened if I was never on the Frankfurt Exchange. It
mm.
really opened up the door in a lot of different ways.
I was trying to find this graph that has this speculation chart on it, and it kind of shows over the years that people were just looking for 15% returns, trying to track the S&P, and then they were going after IPOs, and now they're going after, Bitcoin, and then like ever higher speculation and risk, so that risk reward happens. Why do you think these investors, I'm assuming they're accredited investors, so they're not the same like Wall Street, like Reddit crowd, the Wall Street bets, where a lot of these guys want 100% return because the purchasing power has been diminished from overprinting of the dollar, and they're just trying to claw at some kind of return. Why are accredited investors reaching after such crazy speculation? I mean, I know you have to infer and just kind of guess, but do you have any guess on that?
Are we talking present day? Or are we talking like 5 or 10 years ago?
I guess either. I mean, it just intrigues me either way. What's your opinion either way of why people would be that
So
speculative?
let me answer that too in both scenarios, Josh. If it was 10 years ago, 2011, I get it. Cannabis was speculative. Hemp was speculative to a
Mhm.
degree. What was really interesting is that when I dealt with my investors in Zurich, Switzerland, in England, in Germany, they all knew Israel was already studying the plants,
Mhm.
and everyone over in Europe had a friend who had a friend in Israel,
Mhm.
and they knew where it was going, and they saw the opportunity. So that would make sense to me. But now I don't really have that answer. I still think people forget it's 2021. And what's interesting is when people talk about scenarios in Colorado, and just to pick on the United States, when people talk about Colorado, California, I'm like, it's 2021. It's no longer 2010. It's not 2015. There's so much data out there that some of the stuff you're saying just doesn't make logical sense whatsoever. But people still want to find that 10 bagger, 15 bagger.
Mhm.
And I joke around like we've here at UCS Advisors last year in 2020, we reviewed over 450 pitch decks.
Wow.
Only 16 deals passed our vetting process. And
Wow.
even those best deals, the best one was a 500% ROI in 18 months or less. And we would have some of our clients say, well, find me something that gives me an 800% return in that. I go, well, we see it, we just don't believe in it.
What?
And to be very frank, we actually believe in this five bagger in 18 months.
Yeah.
But if you don't like it, then don't take it. Like the one
Wow.
thing we always say is if you don't feel comfortable with it, don't do it. Have that peace of mind. You mentioned accredited and non-accredited investors. What's interesting is because of police, fire department, former military not being allowed to invest in cannabis or hemp a lot of times. That's why actually here at UCS we actually started actually pretty much an unsecured loan program where you can invest directly in us. It gives us the power to do what we want to do, and we give you a flat ROI. So, and having family members who are former military, having family members who are government officials, and to see what they are not allowed to invest in and how they can not take advantage of this opportunity, it's really interesting because one thing what we may or may not talk about today is how if you're the average middle class American here in the U.S., you kind of get screwed over by the system.
Hmm.
Yeah, if you don't have X amount of dollars, you can't invest into X, Y, or Z. You go to your financial planner, financial advisor. They can't talk about anything in the private sector, whether it's cannabis or non-cannabis related. So where do you go to? And they're going to people like you, Josh, going to people like me, and they're trying to find better sources out there of information. And what I think is horrible is I don't know if you've done this, but we actually did a study in 2019. We interviewed 100 financial planners in the New York, North New Jersey region. 90, actually, technically speaking, 93 of the 100 said we would love to have our clients invest in cannabis or hemp, but we're not allowed to tell them about it.
Wow.
And the remaining 7 said, I will never refer anyone to cannabis or hemp because I won't make any money off of it.
Why not?
Because people are just, they're being selfish and greedy. Versus, though, what's interesting is we interviewed 100 financial advisors between Denver, LA, and Vegas. So, like the mix and match. And it came out that about 80% of them said, oh, yeah, we refer out all the time. We want our clients to invest in cannabis or hemp.
Hmm.
We want them to make money because if they make that 30, 40, 50% ROI, we say, great, now give back the half that profit to us.
All
What was
right.
it nice and conservative for you?
So,
So
so what's up with the East Coast advisors not thinking that they're allowed to? Like it's not like against some sin clause or something. So are they just old school and just don't understand that they can advise that? Or what's the
I,
difference between East Coast and West Coast advisors?
I think it's two things. One, California's had medical cannabis since 1996.
Yeah.
The state of Maine has had medical cannabis since 1999. But
Mhm.
now tell me what other state on the East Coast has had medical cannabis since 2010, really, 2011.
Mhm.
It's really not too much. So you still have a very much of a pre-fixed idea on what you can and cannot recommend, but also not doing your own due diligence. Like we talked about prior to the election, our phone was ringing off the hook in October saying, hey, what do you guys recommend? What do you guys like? X, Y, and Z. And I would joke around. And even I tell some of my employees, I ask them why they go into the financial advisor. They go, well, they don't have any research on it. And I'm like, that's like your financial advisor, financial planner saying, don't invest anything in the internet. The internet's a fad. It's going away. And I'm like, they need to do their due diligence.
Yeah.
And one of the funniest stories that I had someone that wanted to put like 20 grand into the market. And it's about a client, it's been a client of ours for about the last 3 years. And she goes, would you mind talking to my financial advisor? Because he's anti everything cannabis. So I get on the phone and do a conference call, and the guy says, I will not recommend anything at all to any of my clients when it comes to cannabis or hemp. And I go, why not? He goes, it's too new of a sector. I go, great. So what do you recommend? He goes, well, I recommend tech and I recommend, gold. So I go, great. I go, how'd you learn about those companies? Oh, over the years, I did my research on them. I go, so isn't it time to do your research on cannabis?
Hmm.
And he's like, well, what do you mean? I go, tell me what other industry for the last 15 years has gone up 100% every single year. And I'm downplaying the numbers here.
Mhm.
And he's like, uh, 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 um, I'm like, it's not going away. I hate to tell you that, but he had such prefixed ideas, and his upper management We're like, no cannabis, no CBD, nada, nada, nada. So I think a lot of it really comes down to the area that you're in, the state that you're in, how much education you have overall.
That's an interesting point. So on one side, you have advisors who are uncomfortable with it. And on the retail side, you have people that are just kind of speculating and not really sure what they're doing. So it doesn't seem like either one are completely informed, and yet the markets are still rolling. So with the advent of this Wall Street bets, um, blatantly showing that the market is in favor of Wall Street, not Main Street. You can see that in a number of factors, being that Citadel Capital is the true client, and if the product is free, you are the product. And so, with the front running that Robinhood does on its clients to sell that data to Citadel Capital, most people don't care because they don't care that they're going to pay a penny more on that bid ask spread. It doesn't matter to them. They're getting a free product. They've gamified it. But when the market does collapse and the longest bull run in history ceases to exist, and these people on margin lose their ass and they blame the system, what's going to bring it back? How do you bring credibility back to the public equity markets when it's just been blatantly obvious, in my opinion, that it's rigged to Wall Street?
Oof, man, you're asking the loaded questions today, Josh. I love it, man. Like,
You can disagree with me. Yeah.
I just, well, because literally that's why I bring a pen and a notepad, because you're asking these loaded questions right down my thoughts.
I got it. Yeah. Yeah.
Okay, so let's break down what you said. First off, Robinhood, as we tell everyone, all those type of programs in general, listen, you don't control it, plain and simple. And what's interesting is I actually spoke at a cannabis conference in 2019 in November. And someone asked me about Robinhood, and I said, don't do it. It's a sham. One day you'll be taken advantage of, and you're not going to be able to get out of your position. And ironically, when GameStop and all that happened, someone reached out to me via email saying, "Oh my God, Dr. David, you were at Cannabis Conference in November 2019. I'm so happy I didn't do Robinhood." Because you said that. I totally forgot I even said that
Yeah.
to you
Right.
guys, right? So that's the first thing. The second thing is that I think we got to take it a step further. And this is a medical guy. So, like, I take a medical approach towards business. And I take what we call a multidisciplinary approach. We got to look at every aspect. Everything needs to work together in harmony. If you were to look at, and I'm going to say under the age of 29, and I'm going to say probably 18 years old to 29 years old, instant gratification.
Mhm.
They want instant results. They don't want to take the time to learn. And they also, and I hate to say this, almost they don't want to learn from the mistakes. Where it's a game rigged, yeah. To be very frank, I tell people, if you really want to learn how become a technical trader. Take the classes, learn how to actually read a graph, learn actually the sayings, and learn how to like to buy on the dips. Learn, like example, you mentioned, like I can say the word VWAP to you, and you know exactly what I'm talking about, right? We go to have the people that are investing a couple $100,000 on Robinhood or whatever. You mentioned what VWAP means, and they're like, "What are you talking about? What's VWAP? Huh? Was that a new rap group or something?" Like, So it's a lack of education. It's
Mhm.
also the lack of taking the time to learn. And to be very frank, if you don't want to take the time to learn, you're gonna have to go maybe pay $30 or $40 a trade, $50 a trade. No, you may not like it, but you know what? At least you're gonna get someone sophisticated that knows what they're doing for you. And then in terms of the market, I think it's really interesting how the market has changed over the last 5 to 6 years. And as someone who dealt with a lot of international clients who were big fans of the Obama administration because they felt they could take advantage of the administration, versus when Trump came in, they felt very scared and not know what would happen for a couple of years, to now they feel they can almost take advantage of the situation again, that there's lack of a backbone. And these are some of the exact words from some of my international clients. I'm not saying I agree with them, but it's just interesting to see other people's perspective. And this is where I think in 2021 and also in 2022, you're going to see the small cap and the mid-sized cap companies have amazing years.
Mhm.
And Really, and you're seeing it right now. A bunch of these micro caps are doing phenomenal, and you're gonna see more micro caps over the next year to year and a half have amazing breakouts, and I cannot stress that enough.
Is that a result of capitulation, investment capital, or like what's driving that growth?
Investment capital, um, investors who still think it's 2010 to 2015 where they can get at 5 to 6 bagger versus the Auroras or the Tilrays or even like look at a growth generation. I mean, they're doing great, but do you think you're going to get that 400 or 500% return in the next 18 months from them? No. I mean, I think it's at $55 a share today or something like that, or $50 a share. I mean, it's, your opportunity again was at 10 or 12 bucks a share with that. So, and the other thing is too, is that I gotta give the microcap companies what they're really realizing, especially in cannabis. The more you talk to your audience and you take advantage of social media, you get more press releases out. You really communicate. It really shows a big difference. I mean, heck, a great example is I won't say the company out of respect to them, but you had a company that just did a open Zoom call with its shareholders a couple months ago. Can you tell me the last time someone did it, like literally like a Aurora Capital or like a like any of those companies doing having their CEO get on a live Zoom call,
Mm-mm,
take live questions, and speak for an hour and a half?
no.
I mean, that's that, but that also has a lot of that builds a lot of shareholder confidence, though.
Yeah, but is it the right shareholders? Because I would think that an institutional investor would be scared, and not want to invest because of the riskiness of just getting on live and saying something. You don't see that typically, so I would think that would actually scare a lot of brick and mortar investors away.
So let me ask you this: you originally said institutional investors. Are you saying institutional investors are the same as brick and mortar investors?
I think, yeah, I think anyone other than retail, let's put it that way. I think it's going to
Okay.
scare a lot of people other than retail away. Yep.
No, the reason I'm asking that is that just because it's interesting because everybody uses slightly different terms, and I do agree with you on that. But the one thing, and I think it was it Ben Clover of Green Thumb, who
Mm,
Industries, who recently in the last couple of weeks is saying, you know, it's amazing how the lack of institutional investors right now in the cannabis scene,
mhm.
and even a company like Green Thumb that's at like $30 a share right now, there's still them having a lack of really institutional investors where that's where I also, and we talk to our clients about this, where we tell people point blank, in our opinion, you pretty much have till the third quarter of 2022 to get in and still make a really good ROI.
Yep.
Is there going to be a good ROI after the third quarter of 2022? Yeah, there is. But I think you're going to look at your 20%, 15%, which is still great. Don't get me wrong.
Yeah.
But to really take advantage, you got about a little over a year left.
We just did an interview with Larry Swedroe of Buckingham Wealth Management, and he's been in the industry a long time and knows all about sin stocks. So
Yep.
on March 7th, we'll have episode 666 of the Talking Hedge, and it's going to be about sin stocks. Again, because they kind of don't, like you were mentioning, they don't have a lot of the institutional investors behind them right now. And typically, sin stocks are discounted at about 20% as everyone's diving into tech, Facebook and
Mhm.
Tesla and all this overrated garbage that a lot of the central banks, Switzerland, Japan, have billions of dollars of Amazon and Apple and all the stuff. Like, I'm out because they can just print money and buy that as soon as the shit hits the fan. Guess what? That's a drop, and your margin call is getting nailed. And then next thing you know, Bank of America's trading at 99 cents like they did in the last
Yep.
recession. So I'm out. I'm curious though, with the advent of the next crash, what is going to build confidence? Is it going to be artificial intelligence? Is it going to be machine learning? Is it going to be algorithmic trading? What's going to give people that confidence to get back into the market?
Whew. I really think it's gonna be algorithm trading. Is the minute short answer. And I really think too is I overall, I think we're gonna see an uptick in the private sector for cannabis later on in the year, because people are going to see that the opportunities for the pubcos in cannabis and hemp just aren't as advantageous anymore. And realistically speaking, when it comes to voting the confidence, I hate to say this, but I think it's going to between a little bit of, and I'm talking about for the layperson. You got your job back. Is your job secure? Is your state open to pass 50% capacity for dining, restaurants, everything in general, even the mom and pop stores? And thirdly, is what platform do you feel comfortable trading in? And what I think is interesting is how many of like the Raymond James out there, or even for lack of even like the TD Ameritrade's, like, not that saying that's a great example, but you have an opportunity to take advantage of what Robinhood did. It's like, this is why you don't use Robinhood. This is why you should be coming to us. Or I work with a company called Capital Securities, and they have a few offices, and they've been doing trading for me for years, but they're a little expensive. And people say, why? I'm like, because I don't have to deal with the Robinhood BS. Where I joked around with one of my brokers, and I said, why aren't you guys advertising, taking advantage of this opportunity? Because you have people saying, okay, where do I give my money to? Where can I actually give my money to sit here and build that trust on what's going on? And realistically speaking, the people that are the higher middle class, upper middle class, they're not using really the Robinhoods as much anymore. What I also think is really scary is we actually picked up 2 new clients in the last month, and somebody came up about trading. And do you know what they said on how they do their trading advice? And I'm happy you're sitting down, Josh, when I tell you this.
No, no.
So literally, we're going through stuff, and like, we gave a stock suggestion, and it's like, yeah, Dr. David, we couldn't buy this stock, da, da, da. And I'm like, in each client, I said, well, why not? And they go, well, I couldn't buy it on Robinhood. I'm like, wait, I go, you literally run a company that makes 8 figures a year. They go, yeah. And I go, and you do your trading through what? They go, Robinhood. So then wait, it gets even better. It gets even better, Josh. It gets even better. Look at me. You see how excited I am over this.
About.
So then it gets even better. And the guy goes, well, yeah, I follow Dave Poitney, the guy from Barstool Sports. I go, excuse me? He goes, yeah, whatever he does, I just follow his lead.
Oh, shit.
I go to the other client. I go, what did your company do in 2020 in the middle of the pandemic? If everything goes, oh, we killed it. He's like, we have grossing like 9 point something million. I'm like, what's your profit on that? Oh, we're about like almost 40% profit. And I go, but you do all your trading through someone you watch on Instagram,
wow,
and on Robinhood. And they're like, yeah. They're like, why not? I don't trust all these other people in suits.
Oh my
God. And to be very frank with you, Josh, that's where when you ask these questions about the market and confidence, I'm very proud of the fact that we work with a lot of investors in all aspects of business and in life. I mean, our youngest client is now 19 years old. Our oldest is in their early 80s. And we're talking all aspects of for work and industries. But to hear people, I'm like, you literally do 8 figures a year in your business, and that's how you do your investing. And I literally had to break down to say, okay, this is maybe, and like, if you're going to sit here and go throw $500,000 or $700,000 into something, let me get you someone with a little more clout than Robinhood. See, Josh, I couldn't do what you're doing right now, Josh, because
I turned my video off. I can't handle it.
Yeah,
that's crazy shit. So what about?
But that's what's going on, though,
man. Like,
what?
Don't they have a fiduciary duty? They're literally just like throwing a dart on YouTube for investment decisions. How is that a fiduciary duty when you're managing 8 figures in assets under management? That's crazy. That's the bull market. That's the advantage of the longest bull market in history, because you can't go wrong. But when it does, those people are going to get sued.
And so then what's interesting is that we have another client, the one that 7 figures or so. And, I looked at what they were doing, and I'm like, some of these stocks, I'm like, you're up like 270, 280%. He's like, yeah, I'm gonna wait till I'm up like 400 or 500. I'm like, no, cash out your money now.
No, hold on to your life. It's going to the moon.
Yeah, and I literally said, I go, listen, I go, it's like gambling, and I have to give people, because after owning a business in Vegas, and I own a cannabis test lab in Vegas, I compare and I'd bring out so many clients, entertain so many clients in Vegas. I'd always tell people, listen, it's just like gambling. If you're gonna gamble, let's say even $10,000, and you're up, what are you gonna do? Is like, oh, I'm gonna take the $10,000, put it in my pocket. I go, exactly. Play if the house is money. At least cash out your initial investments. Or yeah, heck, you can pay some taxes on that. Cash that out as well too. Like you need to sit here and be prepared. But yeah, Josh, that's where when you asked the question before about what's gonna like make the market stable and stuff like that, that's where unfortunately you have people who are just like, pin the tail on the donkey. Okay, I think that works. Okay, yeah, I'll buy that stock today.
Yeah, you just destroyed my brain. You really did. That's something to marinate on right there.
Yeah.
So I think, do you have anything else that we didn't cover? Cause I'm done. You just crushed my whole day. I got to go get high and reset. That was a nightmare.
Well, so one, I'm happy you gave me the opportunity to talk today, because we have a lot of investors who are what I just said the latter of, and that's scary. The biggest thing I tell people is this, is that if you invest in gold, if you invest in tech, if you invest in real estate, it's time that you look at cannabis and hemp in your portfolio. If you don't, you're really shortchanging yourself. I hate to say it, but cannabis has been deemed essential for the first time in over 80 years. Think about that. And you want to talk about the pandemic or a potential depression, all that stuff. What always thrives during depression? Drugs and alcohol. And drugs also includes pharmaceuticals. Do you know how much the pharmacies are killing it right now? I live in New Jersey. I'm in the pharmaceutical capital of America. And now all these doctors are writing out scripts nonstop on telemedicine. I mean, prescription rate is extremely up right now. So in general, the biggest thing I tell people is this, is that cannabis is not going away. Hemp is not going away. You are shortchanging yourself if you are not at least getting 10% of your portfolio in that sector. So, and that's the biggest thing I just wanted to add to anyone here. Go out, talk to someone that knows what they're doing, get some advice. Remember, free only gets you so far. And if you got to pay someone a few shekels to get the right advice, trust me, it's worth it, because you're going to make a lot more money down the road from it.
Yeah, definitely do your own due diligence. And
Yep.
when you do, you'll find out that sin stocks have an inverse relationship towards market downturns. So any economic correction, recession, depression, you can't have the longest bull market indefinitely. So when that event does happen, you definitely want to load up. It'll be the first time that hemp and cannabis stocks are involved in a recession, to take advantage of that historical inverse relationship with sin stocks, to kind of take advantage with the pop. They always have about a 20 to 30% discount, and that discount will evaporate and turn into a premium when it's the cleanest dirty shirt in the room. So margin calls are going to have to be squeezed out. Nothing is safe until that happens. After that happens, definitely load up your portfolio, but that's not investment advice. All right. I want to thank my guest, Dr. David Kunick. He is the CEO of USC Advisors and Investor Relations. Doc, appreciate you being on the podcast, man.
No problem, Josh. Appreciate it. And I hate to say this, UCS Advisors.
Did I say UCS or did I say USC?
Yeah, everyone says USC because people on the West Coast can think of University of California. But just so you know, and I'm going to let your audience know what UCS means. It stands for two things. All right?
Yeah.
If we're talking cannabis,
yeah,
it stands for Use Cannabis Safely.
All right. That's easy enough.
We're talking about non-cannabis.
I'm seeing it. I'm looking at it, but obviously, English is hard. I miss the days when I could point and grunt, and then my sister would run over and grab stuff. It was way more efficient. English is not.
But for non-cannabis, UCS stands for Use Common Sense.
All right, UCS Advisors and Investor Relations. Where can they find you at? Where are your links at? How can they reach you?
Sure. The best way is you can go to our website, UCSadvisor, which is singular.com. You always go to our LinkedIn page. You can look at me up directly, Dr. David Kunick. We do a lot of intros through LinkedIn, and those are the two best handles for us.
Okay. Yeah. UCS. Use cannabis safely, folks. with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.
I'm Larry Michigan. I'd like to invite you to join Jim, Marty, and me on our weekly podcast, The Deadhead Cannabis Show. Each week we explore the latest cannabis and jam band news and reminisce with other cannabis industry deadheads and jam band aficionados about the great musical acts that we've seen and heard. Check out a new episode every Monday at mjbulls.com or wherever you listen to podcasts.